I'm back with an exciting update on stock market. On Monday, State Bank of Pakistan has issued the monetary policy, and as a result of that, they've announced a further interest rate cut 2%. That's exciting news for the economy. What is the impact of this rate cut on the stock market? Where the stock market is going to go next? And what are the stocks that you should be investing in now to get the maximum return on investment? I'm going to cover all of that in today's video, so watch it till the very end. Just last month, the interest rates was dropped by government from 17.5% to 15%. That had a very positive impact on the economy and the stock market. Stock market responded really well. And today, the market closed at 111K. I was having coffee yesterday with a friend of mine, and he mentioned that stock market is going through the roof. The index is improving every day. However, a poor person, he's becoming poorer every day. The price of goods is not coming down. The inflation is not coming down. How come we see that the stock market is going up? Is this a bubble or what? I tried to explain it to him, what I'm going to share with you as well. Basically, you need to understand the economic cycle, how it works. Right now, we are at a very good place. The economic boom is about to start. Why? Because interest rate is being decreased. When interest rates are being decreased, you have to pay less interest on your installments, on your mortgage. For example, if you've got a car on installments from a bank, or on ijara from Mizan Bank if you go for Islamic options, or you have got a house that you are paying installments of that, those installments are going to decrease because the interest rate is decreasing. The same thing happens in the US, where interest rate is being reduced. As a result of that, their mortgage payments get reduced. As a result of that, you will have more money to spend. So you can either go shopping or you can make some good investments. Some people choose to make investments, and as a result of that, they invest in stocks, they invest in real estate. What was happening in the last couple of months in Pakistan is that the banks were offering really good interest rate, almost over 20%. If you have put almost 10 million in the bank, you will be easily getting around 20 lakh or 22 lakh per annum, which translates into 1.25 lakh or 1.5 lakh or even more within 1 month. That is amazing. As a result of that, they didn't have to do any additional investments. So they were just sitting and chilling and enjoying the good times that the bank were offering them these good interest rates. But now the situation has changed. The interest rate is dropping to almost 50% of where it was before. Now they're not going to get those lucrative returns on investment just by keeping the money in the bank. Now they are thinking of diversifying. Where do they go next? They can either go to stocks, or they can go to real estate. So right now you see the stock market is booming. That is exactly the reason that it's not a bubble, it's something genuine. And now the index is around 111K. It's even gonna go up in the next couple of months because the people are going to take the money out of the bank and put them into stock market. So you see more money coming into the stock market. There is still potential. Now you should be wondering what happens next. So once you have people who've got more money, they either make investments or they put the money, they go out shopping, and that is called economic boom. That's what we are going to witness in the next few years. But when people start spending more and more, the prices of goods increase because the supply decreases and the demand is increasing. As a result of that, the prices increase. That is inflation. Then the government uses interest rate as a lever to control the inflation. So eventually what will happen when the prices go really high and inflation is going to go really high, then again interest rate is going to get increased, and those will be the beginning of tightening the economy. People will be paying more interest on their payments, on their mortgages and their car payments, and as a result of that they will have less disposable income to spend either on shopping or going out or on investments. So that is how the economic cycle works. So when you have interest rate cuts, then you have economic boom. When the interest rates are high, then you get economic tightening. That is how the economic cycle works. That's exactly what we are witnessing. Now, what is the impact on an ordinary Pakistani? The ordinary Pakistani is facing that inflation that was increased in the last few years over 30-40%. Now it is tapered off to less than 2 digits. As a result of that, you are not witnessing a sharp increase in the prices of the goods now. What you are witnessing is that the prices are now stagnant after a step jump in the last 1 to 2 years. That is what you need to understand. So the inflation is not increasing. It's less than 2 digits now, which is a good news. Coming back to the topic, where you should be investing now. Right now, as I told you, that the index is around 111k. So there's more potential yet. The index might go to almost 150k. So December, January, February are going to looking like really good months. So where you should be investing in order to get benefit. If you're thinking you're going to distribute all your investment all across the market, you're not going to get any good return. You have to be a smart investor. You have to study the market. Look at the numbers of the companies. Go to their websites, check their growth charts. Have a look at that, how they have performed in the last few months. If they've already performed extraordinarily well, then there are less chances of them growing at the same rate. So you should not be investing that much amount in those stocks which have already performed really well. Look for those hidden gems which have not performed well yet. And there's more room for growth over there. To give you an example, in my last video I covered that construction will be performing well because there will be money coming into real estate and there will be more money people will be spending in constructing their houses. So as a result of that, construction material like cement and steel, their prices will be going up. We're already seeing that trend in the cement companies. However, steel has not done well yet, so you could consider investing over there. Since auto sector has performed really well, so now you will see that there will be a turn coming of auto parts companies, for example Exceed and Atlas. So you should be considering investing over there as well. However, don't invest blindly. Check out the graphs and indicators for these companies. Check out their websites, see what are their growth patterns. And if there are some companies, there will be some news coming, so you can see that, okay, there is a good time to buy that. I told you in my last video, which is over here, you can watch it. I mentioned to you last week about City Pharma as well as PRL. So these two stocks are doing well. Again, they are improving in numbers. However, as I just mentioned to you, that any stock or any sector which has already done well, so put less money into that because there's less potential for its growth at the same scale. Last but not the least, do your own research before taking any major financial decisions. Don't go on my word only because I'm just a guy on the internet. I'm just sharing my opinions with you and my learnings as well. I hope you found this video useful. If you did, please give us a like and also subscribe to the channel. We have not done that already. That'll be a big favor to us and that will encourage us to make even better content. We'll be back soon with another exciting update on stock market. Stay tuned for more. Bye now.